Bring in Xavier Rolet, CEO of CQS and former CEO of the London Stock Exchange. Thanks so much for joining us. Good to see you.
My pleasure. Thanks for having me on your show.
CQS are obviously a big hedge fund based in the UK. You're known more for investing in debt than equities. Do you think debt is more attractively valued at the moment, given that we're hitting these record
fundamentally, we're bottom-up credit shop, and what we do is driven by our credit analysis, and we tend to focus on individual companies. But equities, for example, and a range of other long-only as well as hedge fund strategies are part of that universe. We have about 32 centers of excellence and find that there are opportunities around the world. We don't have a single house view. I often get the question, where are we in the credit cycle? Is a recession imminent? We haven't said that even earlier this year when fears of an imminent recession were at their height. But we do see signs of stress. Europe, for example, which is on a separate cycle right now. Bankruptcies in the United States have not, and defaults have not risen at a level that would solicit concern. But we are seeing signs of stress, particularly at the lower end of quality on the corporate capex and consumer financing, where it's a little bit harder to raise capital if your credit numbers are not properly aligned.
How are you factoring in the 2020 election into your rate outlook here for the United States?
Well, I mean, we can see this today. You know, the U.S. economy continues to be the beacon of performance and innovation around the world. So there's no doubt today that investors that we speak to around the world look at the U.S. as where things are happening, where the capitalist economy and markets are able to convert innovation the more quickly into value, societal value, as well as, of course, financial value. It's clear that the election is projecting a set of concerns, a debate that creates a little additional uncertainty. But I think investors at the moment are far more focused on whether the trade war or the dispute with China is going to be settled soon or not. We're starting to see some impact in terms of confidence, which has offset some of the benefits stemming, for example, from fiscal reform in the United States, which we really powered the market. And of course, the debate thinks that for those who have been associated in investing in the market, in the U.S. market for a long time, had never heard of like wealth tax and proposals that seem to be more closely associated with the sort of policies you'd hear about in Europe are now percolated on the scene in the United States, is worrying some investors. But I would say overall, certainly investors we speak to in Europe, Asia, and around the world expect the current fiscal and regulatory framework to prevail.
We've been